Hello and welcome to the market update from 5th to 9th of August 2024. So let's start with the world economy. The latest news is from the China, where China exports have grown slightly slower than expected in the month of July, while imports have surged. For July, overseas shipment expanded by 7% year on year, which was 8.6% in the month of June, whereas the import have jumped to 7.2% in the month of July. China still is maintaining a trade surplus of $84.65 billion as compared to $99.05 billion in the month of June. If you look into the Pakistan, the China, Saudi Arabia, and the UAE have agreed to roll over cash-strapped Pakistan USD $12 billion debt for 1 year. This was a condition which was laid out by the IMF, which is likely to approve a USD $7 billion bailout package later this month. Japan, after its rate hike, saw the worst meltdown that has happened in its recent years, where the investor lost about approximately $1.1 trillion in the stock market. This was the steepest decline after a Monday crash of 1987. In response to this decline, the Bank of Japan Deputy Governor Shinchi Uchadi pledged to refrain from further hiking the interest rate if he finds the markets unstable. This statement helped the stock market to rebound a bit. Bond markets were all moved to higher, but the yen weakened by more than 2%. Now moving on to some of the political news. There are a lot of political unrest happening in the world. The two major unrest that we found was in Bangladesh, where the Prime Minister of Bangladesh, Sheikh Hasina, had to resign and fled to India. She is trying to seek asylum from a lot of countries, US, UK, but none of them are in a situation to help her. The unrest, which is said to have started as a student unrest, is seen to be led by the Jamaat-e-Islami, Pakistan, China, and the Western world. The student organization had asked that Muhammad Yunus should take as a head for the Bangladesh government for the interim time. There's another unrest news that came from the UK. The unrest began in Southport on July 29th when man killed 3 young girls and injured several others at a Taylor Swift dance party, and the angry protested after hijacked a local vigil. The protest has actually spread rapidly throughout the north and also some of the south city of the Portsmouth, propelled by false rumor on the internet that the perpetrator of the stabbing was a Muslim refugee. He was in fact a British-born son of parents from Rwanda, and this unrest is said to be exploited by the far-right activists who are always calling for a fight. So, coming on to the US Treasury bond yield, after the unrest in the markets and all the turmoil going on, the yields which started coming down the last week had moved up close to 4% again. If we look at the performance in the world markets, the markets in the last week were again red, even though recovered a bit during the week. The S&P 500 and Nasdaq was down by close to 0.2%. If we look at the Nasdaq, which is highly dominated by the tech stocks, for the month it was down by 10%. The European markets were pretty stable. If we look into Asian markets, we have had a meltdown which the Nikkei market faced, but it was down by 2.4% overall. But if you look at the monthly downfall, it was down by 15% as till date. The Taiwanese market also faced the brunt, and it was down by 16%, whereas the rest of the market for the weeks were fairly in a region of 1 to 2%. India came out with a monetary policy. The RBI Monetary Policy Committee decided to keep the repo rate unchanged at 6.5% in the August FY25 meeting. The RBI also had retained the FY25 growth projection, but reduced the Q1 growth forecast to 7.1% from the earlier 7.3%. Still making India the highest growing economy in the world. The RBI remained caution on high food inflation. The RBI also wanted to ensure that ample liquidity is available to support the credit demand in the economy. If we look at the oil prices, which were on a downward trajectory because of the heightened increase in the US stocks. The US stock of oil has increased again by to $79.46 a barrel. That was up by 2.4% in the last week because of the Middle East tension. So there are still the oil has not reached the $80 mark, but it has started its upward trajectory right now. The gold, if we look at the 24 karat gold, was up by 0.58% and traded for 69,850 per 10 grams. As the global markets were quite affected by all this yen carry trade and the US recession fears, the FIIs became the net seller for this week and sold about 19,139 crores worth of equity, whereas DIs still were net buyers at 20,871 crore worth of equity. So overall impact on the weekly market was that there were a lot of negative sentiments going on in the market. So the Indian market would close down by 1.5% in the broader index, where the Sensex and Nifty were down by 1.5%. Nifty Bank was also down by 1.7%, close to 1.7%. Nifty Mid Cap close to 1.2 to 1.6%. Nifty Mid Cap corrected by 2%. If we look at the valuation after this correction, the Nifty 50 PE is trading at 22.7, which is again still above the 2 years average and below 5 years average. Nifty Mid Cap 150 trailing PE is at 43.5 at 2 years and 5 years high. Nifty Small Cap 100 trailing PE is at 29.3, nearly 2 years high and just above 5 years average. So on the valuation front, even after this correction, we are still not very cheap. The Nifty, the broader index, even though currently at 22.7, seems a bit fairly overpriced, whereas the mid and small, as for last 1.5 years, we are seeing that it is in a danger zone. If we look at the Buffett indicator, is also showing that the market is currently a bit overvalued. Now moving on to the Indian bonds. Indian bonds have been trading in a fairly stable range of 7% of yield. If we look at the yield curves, in the short term, mid term, and the long term, the yield curves are fairly flat, showing that the bond market is fairly stable as of now, as the inflow of the money because of the JP Morgan index is panning out. So that was all from my side. Hope you enjoyed the video. Do share, subscribe, and like to my channel to get the weekly updates.